Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we are counting this move to the downside as a diagonal structure, a 5-wave move in a 1, 2, 3, 4, looking for another leg down in a wave 5 to take out the low of wave 3 and then a retracement to the upside. The invalidation for this scenario is price taking out the high of wave 4 at 58.5k before taking out this low, and another invalidation is the 1-to-1 trend-based fib extension here at 52.8k taken from the start to the end of 3 to the end of wave 4, because a wave 5 is not allowed to be longer in price than a wave 3 in a contracting diagonal. Now this diagonal to the downside can then be counted as a wave C, A, or a wave 1. A wave C would be bullish, as then we are looking for an A, B, and a wave C and price to move towards the upside to take out the high at 65k. Counting this diagonal as a wave A or a wave 1 would be bearish, as then we look for a 3-wave corrective structure to the upside in a wave B or 2 and then a continuation to the downside. However, the price action on the short term is actually similar. In this case, you're looking for price to move down and then move up. The move towards the upside, that is where the difference is made. If we look for continuation to the upside, in other words, if this is a wave C, we want to count impulsive structures to the upside. A 5-wave impulsive move, a leading diagonal, or a multi 1-2 and then get an explosive 3 towards the upside. The moment we start to get corrective structures over here, which is a 3-wave structure to the upside, the probabilities increase for price to move towards the downside. Now this might be a bit more theoretical, so if you don't like this, make sure to skip to the next timestamp. But the reason that we can count this diagonal as a wave C, A, or a wave 1 is because all of the subwaves of this diagonal are counted as zigzag family structures, meaning 3-wave structures in wave 1, 2, 3, in wave 4, and also in wave 5. A leading diagonal, which is labeled as a wave 1 or a wave A, can have 2 subdegree counts. It can be an impulse, a 5, a 3, impulse, 5, 3, and another 5, a 1, 2, 3, 4, 5, a diagonal, and then you look for a retracement to the downside. However, a leading diagonal can also be a 3-wave structure in 1, in 2, in 3, in 4, and in 5. And that is exactly what we count over here. An ending diagonal can only be a diagonal where all of the subdegree counts are 3-wave structures, 1, 2, 3, 4, and 5, which means that the moment you count 3-wave structures in a diagonal, both of these are an option, a leading diagonal as well as an ending diagonal, and therefore we can count this diagonal as a wave C, A, or 1, and then the move towards the upside is going to decide the probabilities for continuation to the upside to take out 65k or continuation to the downside for potentially new lows. Now the probabilities on the 1-hour time frame are also higher for price to take out this low, as we have hit the 886. The 886 here is taken from this low to the high. Now in previous content I've already explained that the probabilities are higher. This is a 3-wave structure to the upside. Hitting the 886 adds more probabilities to that and increases the probabilities to take out this low. Additional reason is that the 886 is a rare target for a wave 2. It is a common target for a wave B or a wave X, so any move towards the upside has a higher probability of being a corrective structure, not impulsive, which increases the probabilities for price to come back down later to take out this low, and that is exactly what we are looking for in that diagonal scenario. However, that is also what we are looking for in the bearish scenario. This is your bearish scenario. In this case, we have a finished 3-wave structure here to the upside, and we look for impulsive continuation. This move down is now counted as an impulsive wave 1, with then a WXY structure inside this wave 2. Then we have another impulsive wave 1 to the downside, a 3-wave structure to the upside here in this orange wave 2, and then now another 1, 2 and continuation to the downside. So we have a multi 1, 2. Now in this case, what we are looking for is price to retrace to the upside in this yellow wave 2. Now wave 2 has to be a 3-wave corrective structure, but just like in the more bullish scenario where we are then looking for wave B also has to be a 3-wave corrective structure. So these two are in confluence with one another. We expect the same type of price action locally. Now for a wave 2, the common target is between the 0.5 and the 786, which is between 57.1k and 57.9k, with the 382 being an uncommon target, 56.8k, and the 58.2k level, the 886, is a very rare target for a wave 2. At the moment, we have not retraced yet to the 382. Now the invalidation for this scenario, or at least a soft invalidation, is taking out this high over here at 58.5k. A hard invalidation would be for price to take out this high here at 59.8k. The reason this is labeled as a soft invalidation is because we could still have the potential of a bigger 3-wave structure in orange 2, because you can see that the red 2 is very long, and it is no problem for orange 2 to also still be a little bit longer, preferably not longer than wave 2, but we have enough time. So we have a soft invalidation, but the harder invalidation would be price taking out 59.8k. Now in this case, we are also looking for price to move towards the downside to take this local low over here. But the main difference between the bullish and the bearish scenario is that in this case, we want price to move towards the downside. We want price to move to 52.8k. We want to see continuous weakness as price is testing support to the downside, bearish CVDs. Right? If we open my support levels here to the downside, including the target boxes, you can see we have a daily here, also a point of control in the middle, and another daily here at the lower end of this blue box, 55.1, 55.4, box number 1, and then down here, box number 2, 52.9, an additional daily naked point of control as well. But in the most bearish scenario, we want to go through this, right? It is no problem for price to test support, but we want to keep testing support with bearish CVDs, move to the next one, bearish CVDs, more weakness, and continue to the downside. In the bullish scenario, we are also looking for that move to the downside, but the reaction at support should be significantly different. First of all, we don't want to hit this support, as you can see, that's the invalidation. So price has to hold this support over here. And what we are then looking for is price to move up in impulsive structures, right? Diagonal, multi-1-2, or an impulsive structure to the upside, preferably changing market structure as well with continuous bullish CVD divergences. If we then look at the CVD divergences, then today the bearish CVD divergences here played out very nice. I explained earlier today why the bullish CVD divergences here were not interesting at all, and you can see nicely invalidated. Also, this one here is not interesting to me because price locally hit the 886, increasing the probabilities for price to take out this low. Of course, locally, what we like to look for, if we do want to look for price to move up, is price moving to the upside, creating market structure to the upside with continuous bullish CVD divergences. Not just one little bull CVD, but we want to see that continue without more bearish CVD divergences forming. We also, of course, have some news. We had some news today at 4 p.m., but tomorrow should be an interesting day. 2:30 p.m. Central European Time on Friday, September 6th. Make sure you trade safe around that hour as volatility might increase, and I will make sure to be live on YouTube at that time so we can check the price action together, and maybe before the weekend we get a little bit of clarity and possibly even test the support here. If we then look at the probabilities of the different scenarios, then generally what we are looking for both in the bullish and the bearish scenario is for price to take out this low here. So I write the local probabilities are higher to take out the low once more. After that, we observe the reaction at support to determine a retracement back up or continuation to the downside. For a move back up, we want support to hold, get a bounce, and build a structure to the upside on a 15-minute time frame with bullish CVD divergences. Preferably what we're looking for is an impulse, a diagonal, or a multi-1-2 for the bulls. For continuation to the downside, we want price to move into support and show continuous weakness. Range on top of support, tested multiple times, and constant bearish CVD divergences. Also, the weekend is coming up, and the weekend is notorious for sideways ranging structures, so that is something to keep in mind. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.